from today or previous days, send them in the off-topic chat, and we'll take a look at them. At first, I'll review one trade for each trader, just in case we run out of time. If we have more time, I'll definitely take a look at more trades for every trader. Alright guys, let me mute this. I muted myself. I really didn't like INO at the open today. Really choppy. It was choppy. Let me actually start with this trade with you guys. So this is the stock I traded, and I'm going to explain to you why I liked INO and why I traded it. You see the daily chart? What do you have here? You're having a clear flat resistance. What do we have on the previous days? We have higher lows, sort of an ascending triangle. And today, before the market open, or at the market open, it looked like a hammer on the daily chart. A hammer which is still not closed. But still, I like that, and I told myself, if it's breaking up and it's breaking these highs here on the daily chart, it will have a lot of rooms to run. And you see that INO could run if there is room for it. So I was really long biased on it. Look in the pre-market price action. At the pre-market, it was chopping around VU up, right? It was chopping around VU up, which basically indicated no direction. And I literally didn't like taking this thing to the short side. Why is that? A lot of support areas on the 30-minute chart, on the 15-minute chart, on the 5-minute chart, on the 1-minute chart, basically a bunch of support. And I'm not sure at which level it will decide to bounce from. So because of that, I basically decided to trade it only to the long side. Now, my entry was based on the 1-minute chart for starters. What do we have here? You see we're having sort of a level here from the pre-market, and it broke it, and at the open it broke it one more time. After breaking it, it didn't get sold off. It immediately got bought back up, and I like that on INO. The next candle, it's making new highs. It's just going up. I wanted to get in a little bit earlier, but unfortunately slippage. This breakout was so fast. I took it to the long side, stop loss half of the candle, and this is my mistake. I wanted to take a partial at this area. Because of that, or instead of that, I tripled my position and I panicked. I just immediately bailed on my trade. And this was a decent winner. Because of that huge ad right there and this move with a small tight, I got 3R winner, and I was happy at that stage. Now look, I did a mistake here. What is my mistake, guys? Let's ignore all the longs. There is one thing I should have done on those trades, and I wouldn't have had 3 losers if I had done that. What could I have done better after taking this trade to the long side? Stop loss. Okay, what was supposed to be my stop loss? Or where was I supposed to put it? According to my rules, and you know my rules, the bottom of the range, exactly. Somewhere down here. Now, why is that? Why the bottom of the range? Because we are trading in the range. This is the high of the range. This is the low of the range. Or you could draw another range, which is somewhere up here, right? And then the low of the range. And remember my rules, guys. If I'm getting into the long side within the range, my stop loss is the low of the range. If I'm getting in at the breakout, at the break of the range, my stop loss is either half of the range or the closest wave we have. Okay? The range is not established, but we are in a range, right? This is the low, this is the high, and I'm getting in within it. I'm getting in for the break, either to the upper side or to the bottom side. Or at least, stop loss, the closing, is the level which bounced off, right? So basically, I'm getting into the long side, and that's my problem. I'm tightening my stop loss. This is full 1R. 1R, which I lost. After that, I'm getting into the long side, and I'm not mad about trying to force this setup to the long side because it looked good for a long. Why is that? Look at this. Reverse head and shoulder pattern, squeezing above view up on an engulfing candle. On the 5-minute chart, look at this. After the selling pressure, it's getting up and closing up there, so I'm taking it to the long side. I'm not mad about the long, but again, bad thing is the stop loss. Look at my stop loss. Within the range. Never put it within the range. At least the level where it bounced from, right? So if I respected my rules on this trade and put my stop loss down there, I would have been stopped out only one time. I re-enter, I again break my rules, and I get stopped out one more time. I re-enter one more time. This time I finally decided to respect my rules and I put my stop loss at the low of the range. And I got stopped out. So basically the 3 R's which I made up there, I lost here. Minus 3 R's plus the commission. So I was down. And this is why stop loss matters. You need to always respect your stop loss and have a technical stop loss. If you are getting in within the range, within the chop, put it at the low of the range. If you are getting in for the breakouts, you could tighten it. Now, let's take a look. What is the range as we said? This is the low of the range, right? This is the high of the range. Okay? Now, let's take a look at the 5-minute chart in this case. What do we have on the 5-minute chart? It's finally breaking down the range. Now guys, I told myself that I'll be interested in this trade to the long side either above this level or either above this level, or I will take it to the short side either below this level or below this level. Can you guys tell me why I didn't take it to the short side on this candle? It did break the low of the range, but why didn't I take it to the short side? I'll get back to all the questions right now, but let's finish this one quickly. Support level, not support level, we broke it. Let's say here, why don't I take it to the short side at the breakout? Not the volume and not the wick. There is a reason. Look at the 5-minute chart. Something we usually talked about. Waiting for confirmation of new candle, that could be, but still. Exactly, Nagraj, the move it did from the bottom to the bottom, top to the bottom side. Remember what we said? Usually stocks do 2 candles or 3 consecutive candles, and then they make a pullback. In this case, it's 1, 2, 3, 4. It's 4 consecutive candles. And because of the 4 consecutive candles, it's just too much for me to force it to the short side, and I'm not sure where to put my stop loss at. I know that the pullback is going to happen, but how big is that pullback going to be? Where should I put my stop loss? What's my risk to reward? Because of that, I decide to wait for a new high. Once I see that there is a new high, then this becomes the first candle, right? After the high, this becomes the first candle. So what did I wait for? As I told you, we wait first for a breakout or breakdown. The breakdown alone is not enough because we will not have a good risk to reward. Now I'm waiting for a pullback, and that pullback is clear on the 1-minute chart. So I see my pattern on the 1-minute chart, on the 5-minute chart. I execute my trade on the 1-minute chart. This is the 4th candle, right? And look at this. You might say, why didn't I take it on this new low here? And I took it on this new low there. I didn't take it on this new low here because at this time we still didn't have the candle closed. This was 1020. Now this candle closed. It did the new high. It made a reverse ABCD pattern. New low, taking it to the short side. Stop loss at the C level. And then just simply partialing all the way down to 1675. Why did I exit all out at 1675 down there? I exited all out 1675 because it's 200 moving average on the 15-minute chart. So with the 10-cent stop loss, I get $1 move, which is 10 hours, but because of the partials, I got only 4 hours realized. For today, I'm up around 3 hours after commissions. So yeah, this would have been way better trading if 3 are up. Don't get myself chopped out. Minus 1 R if I follow my rules, right? And then 4 R up. In this case, I would have been up 6 for today instead of 3. So make sure you are focusing, guys, on your stop losses. Now let's see the questions. Can I ask you anything about this open before I forget it? What was your question, Valerio? You didn't type it. Why didn't you partial? Random, I didn't partial because my partials are at least 2 Rs. I never partial with less than 2 R move. And with that wide of stop loss, yes, it gave me 1 R move, but that's not enough for me to take a partial. I partial only 2 Rs at least. I think commissions, it depends on your share size. If you go with low, like at the beginning, I know some people here trading and they emailed me that they are also implementing the $5 to $10 risk per trade. With this risk, you'll have a lot of commissions. You will have around 20, 30 or 40% of your reward as commissions. But if your share size is bigger, then you can handle commissions more. in this case, like in this trade, it was less than 10%. Maybe actually more than 10%. Yeah, it was more than 10%. My risk is $10 and commission is a lot, but I'm practicing. Yeah, exactly, James. When you are risking a lot, as a little, commissions will be higher. You can't just have small commissions with small share size. How can I trade this open? Is there any pattern I can find? Sometimes it's like I want to jump in the trade, but I ask myself which is the pattern I'm trading. It is obvious there is no pattern because it is so early to find it. So the first, right after the market opens, Valerio, I'm watching for open range breakouts, and open range breakouts are based on daily charts for me. You can check my trades on Twitter. I actually break my favorite open range breakouts or watch my recaps. For this trade, the open range breakout for me was only to the long side at the break. If it's going down, I'm definitely not trading it to the downside. After 5 minutes, you could just watch ABCD patterns, I don't know, bull flags, but with the direction of the overall trend, of the pre-market. If the stock is stuck and it's chopping around between moving averages, you might want to avoid it. Or if you are really biased to one direction, like I was on INO, I was really long biased on it, but look at this, it just literally did the opposite of what I wanted it to do. Then take one trade with one technical stop loss and wait for it to run, and then you can always add if it's going into your favor. Can you explain the relationship between your account size, R, and share size? It's right, actually. You don't need to risk 1% of your account per trade. Especially at the beginner, as a beginner, you don't want to risk 1% of your account. You might have $25,000 account, and I have more than $25,000 account, but I don't risk $250 per trade. That's too much for me. I risk way less than that. You need to risk as much as you feel comfortable risking. If the price action really moves against your intended trade, do you exit prior to the stop loss? No, I don't exit before my stop loss. I respect my stop loss unless I see a setup forming against me. I don't trade 2 Rs or -1 R. I go for more than 2 Rs sometimes. But -1 R, I go if I see that it's worth holding. Like in this case, there was no setup forming against me, and I needed to hold onto my max loss. Sometimes I do exit at break even, like GME trade. I did trade GME actually after, but this one I exited at break even. This one right here, we had sort of a double top forming against me, and I noticed that after a double top with a fake breakout, and you know that if a stock is breaking out, you either want it to run in your favor or you want it to run, pull back, previous resistance, act as support, and then continuing the run. On GME, it did break out, it did pull back, previous resistance acted as a support, but it didn't continue the running. It did a double top, it got back down into the range, making a new 5-minute low, and in this case, I exited break even. That makes sense? So sometimes I do exit at break even, but I exit break even only if I see that there is a setup forming against me. Yes, Valerio. Like for example, GME. I liked it today for a breakout. Daily chart, gapped up. Pre-market, you're having a level here, and then you're having the pre-market high as your level, right? Kind of a level here. I'm not sure. I need to watch the 1 minute for that. But anyway, at the open, I liked it to the long side. Let's get back to the GME. I liked it to the long side, but at least after it's breaking a level. But unfortunately, it sold off a lot. What I wanted it to do for me to trade it, to drop down, get bought back up, close as a hammer, which it did right here, make a new 1 minute high, which is my entry, stop loss below the hammer, going for the pre-market high at 2 to 1. What happened? It sold off more and it gave me the hammer at the low. Basically, this is not an opinion range breakout. I'm going to go against the pre-market level here. Then I'm going to go against another pre-market level. Then I'm going to go against another pre-market level. So basically, and also moving averages, it wasn't the setup I wanted to get. Now that it's breaking the level from here and from here, I could trade it. But look at this. This is already a huge move. $1 move on an $11 stock price. It's 9% move of the stock's price. Is it worth for me to chase the stock after it did a 9% move? Not really. I wanted to pull back and then continue going higher for me to get interested in it, but it didn't do that and it just dropped down. Yeah, you could do that, Samina. I'll actually discuss that more after we end up with the trade review regarding the share size and how you can manage that, okay? And yeah, about the range, I'll also discuss that once we are done with the trade review. Alright guys? So let's start and see what we've got there. Ivan. Perfect. So Ivan traded Twitter, and let's take a look at Twitter, guys. Okay, that's good. I thought you didn't send me the pre-market price action, but I see that. Now let's take a look at the notes. Set up ABCD pattern or an ascending triangle. Indicators, it's breaking higher after basing for last 2 weeks on the daily. Where is the daily chart? We don't have the daily chart, right? Okay. It had been holding up. Okay. The clear level around 41.45. Multiple touches. I see that. Oh my god, this is too big. Alright. This is a clear level you saw. And triple hammers on the 15-minute chart. Do we have the 15-minute chart here? Not really, but okay. You had the triple hammers on the 15-minute chart for your confirmation. Entry at the breakout. Risked 11 cents. Exit, stopped out. Notes, price made lower low at 1020. Would have preferred to see higher lows the way to the breakout level. Okay, let's take a look at this thing. The setup is not bad looking on the 1 minute chart. I see the ascending triangle. It's not literally ascending because you don't have higher low touches, right? It's more of a channel. What's the channel? When you're having a high and a low and the stock is trading in a range. This is a channel, right? It's not an ascending triangle. For an ascending triangle, you want to have a flat top and you want to have higher low waves. The moment the price gets so tight in a range, you get in for the breakout and then you just start partialing on the way up. This is the ascending triangle. This here, it wasn't an ascending triangle. It was making a high wave, lower high, higher high. So basically this wasn't an ascending triangle. Now let's take a look at the 5 minute chart. The 5 minute chart was also like wide bar candles. There was no tightening in range, right? I personally would have avoided this trade right here because it wasn't that clear. Still, your entry wasn't bad. It definitely was a good entry. You entered at the breakout, clearly at the breakout. And one thing though, the level was not so clear, right? Here, it bounced a little bit below the level. Here, a little bit above the level. Here, exactly at the level. And here, it's a little bit below the level. So basically, it could go a little bit above it, below it, or at the level, and then drop down. This way, it's not so clear. When you see that it's clearly bouncing off same level, you could be more patient about it. Now, the break wasn't bad. I see that it clearly broke it for 5, 6, 7 cents. Like in comparison to those bounces, this definitely was a decent breakout. You are taking it to the long side. Unfortunately, it's getting you stopped out. One thing though, the stop loss, I wouldn't have had it that tight. I would have given it at least half of the move right there. Still would have been stopped out. So the setup wasn't so bad there. B-Tank. So B-Tank traded a parabolic reversal, and let's see what you saw there. Was this yesterday? I bet this was yesterday, right? No, it's today. Okay, it's today. 5 minute chart, we're having one. Okay, you're taking that parabolic reversal to the long side, right? Yeah. You're having one candle, two big candles, which is not bad. Engulfing on the 1 minute chart, new 1 minute high. Adding to the long side, being patient about it, exiting and exiting the rest at break even. I wouldn't have exited this at break even. Anyone? Why? I used to exit here, but now I don't anymore. There is a reason for that. You see that there is a resistance here. It did make a new 1 minute low, but it's fine, right? You're having a resistance here, or the high of the range. You're having the low of the range. You see that it's chopping around the range, and now finally it's breaking the range. After the breakout of the range, stocks could pull back to the previous resistance and act as support. In this case, it got a little bit into the range, which is not bad, so I would have just simply held onto it at least for half of the range. And this is why I told you, after breakout, I put my stop loss at the half of the range. I don't put it exactly at the resistance, though stocks after breakouts, a lot of times they either bounce higher than the resistance or exactly from the resistance. Sometimes they get a little bit into the range and then continue going higher. So if I see that the stock is making sort of a range, then it's breaking out and then it's coming back down into the range, I would move my stop loss to the half of the range. But I know I exited at break even. You exited break even maybe because this was you exited at this low because it was your break even. Yeah, I would have held on to this one though. Now let's see what you did after that. You taken it to the short side for another parabolic reversal. It's making one candle, really small candle, I wouldn't really ignore it. This is actually 3 bar play here, huge bar candle, followed by a doji or a small candle, and then a new high. This is a 3 bar setup. How do we trade 3 bar setup? Once it's making a new high, you take it to the long side, you put your stop loss at the low of that bar, and then go for it. I wouldn't have done that on the 2-minute chart. Okay, on the 5-minute chart I see, sorry, I thought this was the 5-minute chart. 1, 2, 3 consecutive 5-minute candles. Actually, yeah, this is good. You're taking it to the short side on a new 1-minute low. I wouldn't have taken it on this new 1-minute low because there is a hammer. Now this is a reversal candle. It's called a hanging man. When you're having a hanging man at the high of the day and then a new low, it's a reversal candle. But I don't go for it because most of the time I get stopped out. I mean, it is a reversal candle, but for me, when I'm trading those parabolic reversals, I get stopped out more often, so I just decided not to trade it after hammers. You get stopped out on this one, you are re-entering one more time. This re-entry is good. You're having small fake breakout, a new 1-minute low where you are taking it to the short side. It's going a little bit in your favor and coming back up. In this case, I would have exited at break even or at small loss. Can you guys tell me why? Similar reason to this one, but the opposite, and it would be a reason to exit. Good hammer is one reason. Another reason, just complete it along with the hammer. What happened, or what did this hammer do at the beginning before it became a hammer? Exactly, Lou. Yeah, so first of all, it's breaking down below the range. And after the break of the range, you want it to either flush down, at least to the 9-moving average in the 5-minute chart. It gets close enough to the 9 actually. You want it to break down, pull back, continue, or break down immediately, break down, pull back a little bit into the range and then continue. But if it goes back up into the range, half of the range, I would just simply bail on it, right? Exactly. So B-Tank, this trade was amazing. I really like it. Would have been good if you could held on to this partial. This trade, I personally would have avoided. This trade was totally fine right there, in my opinion. Zach, let's see what you did there. Traded GME and you traded it. Yeah, I actually remember what you said. I liked it here, but I didn't take it here because we had a bunch of resistance ahead of me. Let's see what you liked right there and why you actually took this trade, which I didn't take. Crystal clear uptrend in the pre-market. So look at this here. In the pre-market, it was clearly uptrending. It's making higher low waves, right? Yes, you're having red candles, but having red candles doesn't mean that the stock is downtrending. As long as you're having higher lows, the stock is still strong, right? 3 million shares traded in the pre-market, which made you watch this stock. Entry reason, I was long biased, so when I saw the buying pressure in the first 2 minutes, I went long with a stop loss at 10.20. 10.20 for a stop loss. So now, regarding the stop loss, if I take it before the candle close, I'll put my stop loss at the low. Once the next candle breaks up, I would add to my position and move my stop loss maybe to 10.20 like it did. Why is that? Because we know how the market trades. It could just open, sell off a little bit, come back up, and then do this. Like the same thing it did here, but with another week of buying pressure. And I don't want this week to get me stopped out before it shoots back up. So what I do in these cases, I enter with a wide stop, and once I see that the next candle is working in my favor, I add and then I move my stop loss. Just something to pay attention to in the future in case you get subbed out. Now exit, you're exited all out because the target was 11.20, just below the pre-market high. Missed it by 3 cents, unfortunately. Partials at 2 hours and 4 hours, amazing. Half remaining position at 9.35. I see you added here. I personally wouldn't have added here. Why is that? Guys, we don't want to add on the way down. When the stock is making lower high, lower high, lower high, lower high, it's better to just avoid it. The end of the pullback usually is at least the moment it's making a new high, which is here. Still, I wouldn't have added right there because we are getting the moving average cross, and usually I notice that after crosses, stocks pull back and then they continue the downtrend. The second reason is this was a parabolic pullback, and the final reason we're having an engulfing candle. The engulfing candle on the 5-minute chart is the beginning of the next setup. So you're having a bullish candle at the beginning, then you're having a bearish candle. This is a bearish engulfing candle, and that's the setup, bearish engulfing crack. Once it cracks the bearish candle, it might just simply sell off right there. Good job and well managed in this one. Zach, okay, Zach, we did review this one. Finto, let's see what you traded, and then we're having cows. So let's see what you did. You traded PTON, and this is what I wouldn't have done, or this is basically something similar to what happened to me on NIO. You are taking it to the long side on the way up, and you are tightening your stop loss, because of which you are just getting stopped out. Trying to enter one more time, and you are getting stopped out one more time. Shorting, and the short was really nice right here. You are having a bearish engulfing pattern, and you are partialing so early. Now this is how you don't want to manage your trades. You don't want to have full losers or big losers. For example, if you're risking $50, lose $50, then lose another $50, and then make $20. This will definitely not bring you consistency, guys. You want to hold on to your winners and cut your losers. What I like about what you did here, Findo, is that you cut your losers. This is a really good thing, and it's tough to do sometimes, exiting a trade when it's going against you. What's a little bit more difficult to do is holding to your winners. Try to master this thing, and hopefully your trading will improve a lot. Now, I wouldn't have shorted this thing right here for a reason. In the pre-market, it's clearly holding below view up. It's clearly holding below the 20 and the 9 moving average. Moving averages are also clearly sloping down. If we take it to the long side, let's say above this candle right here, you're going against a level in the pre-market here, then another level here, then another level here, then another moving averages or other moving averages on your way. So with this risk down here, this reward up here is not worth it, right? So basically you need to avoid trades. Yes, maybe you are having the confirmation for an entry, maybe you are having a stop loss, but the reward is not there. You want to get into a trade which is having a good stop loss, a good entry point, and free room to move into your favor. At this moment on PTON, it's holding below moving averages and below view up and below everything. I'll be more short biased on it. Why is that? Because at the break of this level, it will have literally nothing below it, and it could run to the bottom side. So your short, once it broke these candles down here, was great. You're having stop loss at least new 1 minute high, and you will have room all the way to the $90, and if it's breaking it, you'll have a lot of room below it. No need to partial here, right? I know you partial because of this small candle right here, but it's not worth partialing that early, right? So an opening range breakout doesn't mean that you get in at the breakout. 1 minute open range breakout doesn't mean you catch or you get into new 1 minute high. 2 minute open range breakout doesn't mean you will get into a 2 minute high. 5 minute open range breakout doesn't mean you need to get into a new 5 minute high. Imagine you are trading this for a 1 minute open range breakout, then you get stopped out. Then you are forcing it into a 2 minute open range breakout and you get stopped out. Then you are forcing it into a 5 minute open range breakout and you get stopped out. It's not the way to trade this setup. This setup, you need to analyze the pre-market, price action, the daily chart, and the overall direction or possible direction for the stock. You need to have room in your favor. You don't want to go against resistance, okay? Like all of those moving averages and levels in front of you. If this thing, for example, opened here, let's say this price action isn't there, this is a red candle here, and then it's making a new 1 minute low, you could take it for 1 minute open range breakdown to the bottom side. Why is that? Clearly you're going in with the direction of the trend from the pre-market. I'm not sure what it's doing in the daily chart, but let's say it's weak on the daily chart, and it's making a small 1 minute candle which is smaller than the average true range, which is close to view up and making a new 1 minute low. You take it to the short side with the direction of everything, and then you go down. Let's say the first candle opened strong, similar to what happened here. You don't want to force it to the long side, but you might take it for a 5 minute opening range breakdown. Because the 1 minute is not good, the 2 minute is not good, 3, 4, 5, it's not good because we don't want to trade it to the long side yet, at least, unless it's going up, pulling back, and then continuing to go to the upper side. So basically we don't want it for a 5 minute open range breakout. Looking at it, now it's setting for a 5 minute open range breakdown, and you're taking it to the short side with the direction of the trend, because it wasn't ready for a 1, for a 2, for a 3, for a 4, but it's ready for 5. Sometimes it could be ready for 15. Now let's see Edwin. Wait, I think I missed one trade. Let's take this one first. So traded Apple, and you traded Apple to the, like, look at this. This is a good trade. If you take it to the long side, did you take it to the long side? Oh, sorry, to the short side, right? You trade to the short, Apple? Exactly. Now this is a good trade. You see that it's, in the pre-market it was holding above view up and above all the moving averages, right? But at the open it's getting below them. And I like that. It's breaking the level down here, and it might have some room all the way down to the next level. Unfortunately, it still has a lot of support below it, but this is decent. Like, this is at least decent a little bit. One thing though, your stop loss was so tight, right? And you said it was tight. What is the best stop loss in this case? If you're taking it for a 2 minute open range breakdown, the best stop loss is at least half of the candle. Like, at least that's when you go for open range breakouts, because they're breakout patterns, and at the breakout you put your stop loss at the half of the range, right? So unfortunately it got you stopped out. On this trade you're re-entering because you see that it's actually still working, and this one is going in your favor and you are partialing all the way down, which is amazing. Then you are taking a parabolic reversal, or a reversal, I guess. This is not a bad reversal because you see that there is 1, 2, 3, 4, 5 consecutive candles, and after 5 consecutive candles a pullback is expected, right? You're entering into a small double bottom on the 1 minute chart or on the 2 minute chart, yeah, and the 1 minute chart as well, entering to the long side, and you are partialing at the intraday level, another intraday level, moving average, and all out at sort of a reverse ABCD pattern. Really well done there. Target was 8 hours on the 5 minute open range breakdown, but you got 5 hours due to partials. Still, good job. If you get more than 2 hours, that's enough. 2 hours is also enough. Hello, Alchemist. Okay, let's see Edwin now. So Edwin traded PTON, and let's see what you did on PTON. You tried to force it for a short for a parabolic reversal, but it got you stopped out. Now this is not the best parabolic reversal. I see that it worked out for you, Edwin, right? But remember, what is a parabolic reversal? A parabolic reversal is a reversal which happens after a parabolic move. For these type of reversals, you need to see at least 3 consecutive 5 minute candles or 2 huge 5 minute candles. Stocks, they do trade close to the non-moving average in the 5 minute chart, but they not always are touching it. They could just simply get closer to it. In this case, there was some gap between the current price and the non-moving average on the 5-minute chart, but it's not a parabolic reversal, it's just a clear trend. There are a lot of fake lows, right? Fake lows. It's just going up, pulling back, going up, pulling back. It's not parabolic yet. It will be parabolic after. It's like even here, those 3 consecutive candles are not enough to take it for a parabolic reversal because they're so small and the stock is so close to the 9 and the 5, like 30 cents, 20 cents. It's not a huge move right there. So I personally would have avoided this setup. You took it for a scalp, which is not bad, right? But it's not that setup. I don't feel like second trade is good setup, although worth. Yeah, you see? Exactly. You see that it's not really good because it's not meeting the criteria exactly. It's just not extended. Okay, let's see what else we have there. JC. So JC traded in KLA. Indicators. Actually, I like this setup. This setup, I was watching it, but I missed it unfortunately. So after the initial sell-off, formed an uptrend. So at the open, it started selling off. You saw that, guys, right? It's making a new 5-minute low. It's not breaking the pre-market level, and then it immediately got bought back up, breaking the range. So you're having the high of the range, the low of the range, it's breaking the range. You definitely don't want to force it to the long side because this would be your stop loss, and your stop loss is so wide, you don't want to force it on the 3rd candle because after 3 consecutive candles, stocks either consolidate or then pull back. You see how this happens a lot. Not all of the time, but it happens a lot. 3 candles, consolidation or pullback. 3 candles, consolidation or pullback. 3 candles, consolidation or pullback. Then it's just going sideways. But yeah, this is happening a lot, which is why you don't want to force or rush an entry. What did Edwin wait to do? He waited for a pullback. That's it. It made a pullback on the 1-minute chart after a breakout, taking it at the bottom, partial and close to the high. This is not something you might want to do in the future. For an ABCD pattern, the ABCD pattern is a breakout setup, right? And you know that since it is a breakout pattern, you might want to wait for the setup to actually break out before you are taking your partial. But I see that your stop loss was so tight and you missed your risk to reward. You got your risk to reward. Looking at this entry, definitely it was 2 hours if not more, which is still not bad. If you're getting your risk to reward, just take partials, and then you partial all the way up there. Let's see, 2 hour first partial. It's my rule. Yeah, good job. I see that. If it's your rule, definitely it's a good thing, and with your entry, you definitely get that 2 hours. Amazing. 9.5. Trading live or still not yet, Jason? Seems still. No, you're doing well. How long have you been trading in simulator? Nine months. Okay, that's really good. I like it. You're not rushing it. Do you have any ideas when you want to go live? When I have 2 hour sample. Okay, that's good. So Jesse, the charts below are a little better with time frames. Okay, let's take a look at that. So it's Apple 1 minute right here and Apple 5 minute right here. Let's start looking at the 5-minute candles, right? Because we want to trade based on the 5-minute chart and getting our entries based on the 1-minute chart. So this is what Jesse did. You see Apple in the pre-market is going up. At the open it's selling off and he's not forcing any trade right there. It's giving him a pullback, consolidating in a range, breaking the low of the range where he shorted it, breaking the next low right there or intraday level where he added to his position and I bet moved his stop loss. So I think your short was here with the stop loss up there at the beginning, right? And then you're adding to your position at the breakout and moving your stop loss somewhere tighter. Yeah, exactly. I would have done the same thing right there. Really good job. partialing at the low of the day, 30%, amazing, and exiting all out above a big bid at 110. So yeah, good job, well managed on this one. Remember, you could leave like 10% or 5% of your position. This big bid, how big was it? If you have, let's say 50,000 shares, it could be a big bid. Yeah, 100, yeah, it's still not big for Apple. Apple has around 400 to 500,000 shares traded per minute, right? So 100,000 shares is not that big, but still it's definitely unusual, because of which you might want to take a big partial, but you could still leave a little bit of position in case it's going to break it. Try to compare the big bid or ask on the level 2 with how many shares it has or it's being traded at per minute. If that bid is 2 or 3 times smaller than the average it's being traded at per minute, then you could just simply hold on to a trade. If it's bigger than that, then you could exit all out or maybe go against that bid. So Joe, the reason is that bid could act as a wall. It's a bearish sign if that bid is far. Let's say the price now is 105.50. And you see there is a big bid at 105.10, for example, okay? Now, look at this. This big bid, it is an indicator. It's not a must, but it's indicator that the price might go to 105.10. Once it reaches it, it doesn't mean that it will go lower than that, unless you're having another big bids stacked below it at 105, maybe 104.90. If you have a lot of bids stuck down there, this is a bearish sign. Now let's say the price is 105.50 and there is a huge bid at 105.50. The price reached it, and this bid right here, it could act as a wall. Some shares of this huge bidder could get filled, but if the order is so big, not all of his shares will get filled. Some will get filled, it will act as a wall which it can't break lower, and it will bounce out of it and then make a small pullback. So Jesse, let's take a look at the 1 minute chart. This is actually really good, I like it. You're having sort of a descending triangle. Your entry on the wick, which is amazing, on the pullback at the breakout, and you're adding more at the break of this range, partialing down there and partialing at 100. Look at this. So this bid, actually it didn't get filled all immediately. He's partialing above that bid and then it's making a pullback. The next time it actually got filled and broke down, and look at the volume. This just, it shows you that there were a lot of shares there and they got filled. Because of this, maybe the volume was a little bit increased. Guys, let's take a look at his trade. He's not here, but he sent me one of his trades. Not one, few actually. But let's take a look at this one. I like this one for one reason. What's the amazing thing in this trade, guys? Can you tell me? There is something which is really difficult to do. And I've been struggling to do that for a few months and I'm still struggling. But I plan on working on that. Exactly, Jesse. It is really difficult to do that. The ads themselves, they are not difficult, but adding on the way down, it is the difficult part, right? So he's entering here, adding on the way down. Look at this. Some might just exit at the trade once they see the red candles, or once they see that the stock is going against them, they'll be bailing out. What is he doing? He sees or he feels that this is just a pullback. There is no reason to exit, so he's adding at the pullback. Look at this, he's not doing anything here. At this stage, he's just doing nothing. No, it's not cut off. There is the volume down there. Now, look at this, he's not doing anything there, right? There is no reason. Now look at this, it's bouncing out of this level right here, coming back up, breaking out this small range right here. He's adding one more time, partialing at the double top, or maybe the moving average, or maybe he had another reason to partial right there. Look at this, he took a partial, stock is dropping down, and still there is no reason for him to exit. He's still holding on to his original position, right? Or original stop loss. If it goes to his original stop loss, maybe he would exit on it. If not, then he would treat it as a pullback, and he's adding to his position. Look at this, it's going up, moving average, maybe level, something on the level 2, anything right there, but he partials. Look at this, it's dropping down, and on the way down he's adding. He's not adding at the breakouts. At the breakouts, look at this, just pay attention to this. At the breakouts he's taking partials. At the breakouts he's taking partials. At the breakouts he's taking partials. On the way down, he is adding to his position. Adding to his position, didn't do anything right here, right? So he's not averaging. He has his plan and he's following his plan. Maybe the previous resistance was a reason for him to add. Now look at this, going up at the breakout, not at the breakouts, he's partialing. On the way down, he's adding at the breakouts, partialing. On the way down, adding, and at the breakouts, he's partialing. By the way, his last order got filled, as far as I know. I'm not sure how much he's adding in these positions. It depends on what he sees on his initial share size. Maybe sometimes it's big, maybe sometimes it's small, right? But every time I bet his stop loss is moving up. But the best thing and the most difficult thing to do right there is adding on the way down. You want to get in as close as possible to the support, and you want to partial as close as possible to the resistance or on the way up. Exactly, Samir. And this is the something I need to work on and something I'm not proud of, right? I am adding at breakouts after confirmations. I go in 4 confirmations, right? Kaiser is adding at pullbacks, and this is the smart thing to do. But it's so difficult to do that. When you see that the price is going against you, you start thinking about bailing on the trade, not to mention adding into it, right? It looks easy here and it looks so good, but in fact, in real life, it's really difficult thing to do. I mean, sometimes the price goes through big bits, right? Yes, exactly. It does that, Lucky. Enzo, hello. It's not must to only add on the way down. I think it's just a matter of preference. It's not a must, Enzo, to add on the way down, but it's better to add on the way down or as close as possible to the support, because your average or your adds gets you as close as possible to the support, and the move to the upper side gives you bigger reward, unlike adding on the way up and then partialing on the way up, right? Would you mind explaining what you define as pivot point? Well, first of all, it seems what I was calling is a wrong terminology. It's not pivot point, it's swing highs and swing lows, okay? But still, it's the same thing, right? It is the highs of the waves, the intraday levels. Those intraday levels, they could act as a resistance at breakout. They're acting as supports, acting as a resistance, could act as a resistance, right? Breaking out, pulling back, acting as support after resistance. See, those are intraday levels, swing highs and swing lows. So you just simply mark intraday strong levels which have been touched multiple times. Would you mind? Okay. You definitely don't want to take it to the short side, for example, I don't know where, here, against this area down here after a breakout, because it could just simply respect it as a support and continue going higher. If you are having a huge room between your entry and that level right there, which could be as your reward, then you could try to short it and partial closer to that level, which might act as support. Okay, do you have any other questions, guys? Joe finds you need to click on upload message image, and it needs to be on JPG format or PNG. Other formats are not accepted here. For 1 minute operation breakout, what are the 3 important things to consider for a setup? Nagraj, let me actually open my Twitter account and I'll show you some opinion range breakout patterns which I have right there. I actually let me see. So for me on an opinion range breakout, I want to see a stock which is gapping up, or a stock which is at least trading above the moving averages and above VWAP. And I want to see it breaking key levels or key pre-market levels. I would be patient waiting for that. It could be a 1 minute open range breakout, it could be 2, it could be 10, it could be 15. But that setup will be once it is ready. In this case, it was ready after 2 minutes. So let me show you another times where it's taking a little bit more time to form. This is 1 minute, this is not a breakout. This is a breakout, codec. We see that on the daily chart, it gapped up. You have daily level up here. And today, if it breaks it, it will have a lot of room above it. In the pre-market, you're having a tight range, right? In the pre-market, it's not making a huge move. At the open, it's closing as a hammer, giving me a new 1 minute high. It's making a new 1 minute high. Along with that, it's breaking the pre-market high. Along with that, the direction of the gap is on my favor. I take it to the long side and partial all the way up. Let me show you another example for breakouts. This is not a breakout pattern. This is another pattern. This is actually a breakout. No, it's not a breakout. Let's see some breakouts. ITCI, this is a breakout, but it's breakout of the low of the day. Apple, this is a breakout, but this is a breakout later in the day. Breakout of the low of the day, right? Descending triangle, breaking the low of the day, along with the pattern, along with confirmation candles. Take it and then just drop it down. But this is just later in the day. Let me see something earlier. This is 1 hour open Apple one more time. What do we have right here? A stock which we dropped a lot on the daily chart, closer to a resistance area. In the pre-market, it is uptrending, not a huge range right there. At the open, closing as a hammer, I'm taking it to the long side against pre-market high. I don't partial at the pre-market high because my risk to reward is not there yet. I'm adding at the break of the pre-market high. Now this is a 2 minute open range breakout, right? 2 minute open range breakout along with the break of the pre-market high. I want to implement the pre-market price action, the daily chart, along with my open range breakout. I wouldn't take it to a 1 minute open range breakout only because it's 1 minute open range breakout. In this case, now we're also having an ABCD pattern, right? An ABCD pattern along with 5 minute open range breakout. I didn't take it for a 1 minute open range breakout because it was a 1 minute and then a 2 and then a 5. Every time it just gave me the setup. If it's not giving me the setup, then I would be more patient about it and I might wait for it for 10 or 15 minutes. In this case, I didn't even wait for 1 minute to take it to the long side. Daily chart gapping up above the level right here. Today, it gapped up. In the pre-market, ABCD pattern, what do we have? We're having the break of the pre-market high on the very first minute. No need even to wait for a break, for a 1 minute high right there. Then we're making an ABCD pattern with a 5 minute open range breakout, which you could also have taken in this case. Let's see another open range breakout. This is it right here. This is a 10 minute open range breakout, right? The daily chart is gapping up. The pre-market level is right here. It wasn't set for a 1 minute open range breakout. It didn't take it for a 1 minute range open range breakdown because going against support, that's not my plan. The stock gapped up. A lot of support down there. I don't like it for a 1 minute open range breakdown. I like it for an open range breakout. But when will it give me that open range breakout? On 1 minute, 5 minutes, 10 minutes, I'm going to wait for that. Now look at this. It's breaking the pre-market high, but in this case, my risk will be a little bit big and I don't want to have 20 or 30 cents stop loss on a $7 priced stock. It will be around 5% of the stock's price, right? Now, pulling back, coming back up, breaking the high of the day, along with 10 minute open range breakout where I take it to the long side. So basically what I want to see, just in short, because it will take a lot of time if I go through all of my trades there or open range breakout trades, I want to see tight range in the pre-market. I want to see clear breakout levels from the pre-market. I want to take it with the direction of the moving averages. Alright guys? Any other questions, guys? Alright, thank you everyone, guys on YouTube. Thank you for watching us. This will be recorded, it will be posted on YouTube. Have a good day everyone, trade safe, and I will talk to you in the chat room. Yeah, thank you everyone. Let's see, where is that? Okay, I lost something there. Okay, there it is.